Hi, Larry Gaines, Power Cycle Trading. In this video, I'm going to show you a really great way to trade markets intraday. So, when we have a lot of market uncertainty, Trump's tweeting this, Trump's tweeting that, trade war, stuff like that, a lot of times you get a little bit hesitant about, taking trades overnight, swing trading, etc. But it still leaves you a lot of great opportunities with the volatility that we have in the market for some intraday trades, especially on the particular stocks that are really moving. So what you want to do is find those stocks that are moving, that have liquidity, and then jump on them for the ride for an intraday trade. So here's an example of Amazon. You can see it's just been on a huge, massive move up. It's got earnings coming tomorrow, so typically it tends to trade into higher into earnings, and so what you want to do is focus intraday on something like an Amazon. It could be anything: Amazon, Netflix, Google, etc. But find one of these that has big potential intraday moves, and then look and focus on it for an intraday setup. So let's take a look at Amazon. So one great way to look to trade these is using an opening range. Okay, so this is an opening range indicator that I've developed, and what we look for is an opening range high and low to trade upon. And then this is what we call a volatility squeeze. So you can see here, this is a 2-minute time frame right here and a 5-minute time frame. So we're having multiple squeezes. We have a 5-minute squeeze and then a 2-minute squeeze. So this is what I call potential for a max breakout, when you have a volatility squeeze inside of an opening range, and when you break that opening range high, you can get some pretty explosive potential moves up. So here we had that really nice move out of the 5-minute squeeze right here. That came about 10:30 Central, and you can see it went from 1836 to the prior day's high right here at 1840. Then it consolidated again, and here was another trade setup right here to break out on the 2-minute time frame for a move higher off of that volatility squeeze from the 2-minute. So you had a number of opportunities here to get in. You could have gotten in right here at 1836, or you could have gotten in here when it triggered back above the prior day's high, and then it traded all the way up to, you can see all the way up here to as high as 1852. So a great way to do this then is also by using options. So here would be the option trade setup that you could have done here on that break of 1840 on Amazon. So what you can do is you buy the strike, the 1840 strike. So here's the 1840 strike Amazon for this week's expiration, 27 July. So you could have picked that up here as it was breaking out for 43.45 per option contract. So and then you can see now with it trading up here at 1848, that contract's up, it's at 48.45, so it's up $460 on that one contract. Okay, so the other cool thing though you can do then to neutralize your risk, if you wanted, you could actually convert this then to a call debit spread, and you could sell like the 1850 strike, so $10 wide. You can see it's going at 42.60. You could sell that right now, and that would reduce your risk down to $85, and you could hold on to this trade as a call debit spread into tomorrow's expiration and potentially even make more money. So a lot of different ways that you can trade intraday, but I wanted to share this idea with you.